Good morning, everyone. Welcome to today's breakfast meeting brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. On our agenda today, our traders will give us the usual rundown of the equities and fixed income markets, and we will conclude with headlines from across Africa brought to us by our media partners, Frontier Africa Reports. At this point, we would like to remind everyone that this meeting is being recorded and the audio files may be shared with third parties. We're also live on our Vetiva online Facebook page if you'd prefer to join us from that platform. Finally, during the duration of a 30-minute session, you may send in your questions using any of the chat functions available on Zoom and on Facebook. However, if you prefer to speak, we would have a Q&A segment at the end of the session where you can indicate using the raise hand function. We will now start off the session with Simbiat from our Global Equities Desk. She will be taking us through some markets across West Africa. Good morning, Simbiat.
Good morning, Angela, and good morning to everyone. As like you mentioned, I'll be doing a quick recap of yesterday's activities across some West African markets. And starting in BRVM, just as expected, the market extended its losing streak, this time shedding 23 basis points as sellers continue to dominate the market. So out of the 42 equities that traded yesterday, the session ended with nine stocks gaining and 14 shedding points. Topping the losers charts were Vivo Energy, Sever Abidjan, Total Senegal, and Isai Bank Cote d'Ivoire. Speaking to market activity, this traded mixed, with ETI recording the highest volume of trades. And we expect to see this trend continue with market trading mixed in today's session. Over in Ghana, the market recovered from the flat close on Tuesday as the composite index closed up by 2.46%. And this was on the back of the positive close we saw in MTN Ghana and Enterprise Group, which were the only two stocks that gained yesterday. For market activity, this also traded mixed as MTN Ghana recorded highest volume of trades, accounting for 98% of market volume. So taking the MTN trades out, it was a very quiet session. And for today, we aren't expecting any significant change in terms of market appreciation or trading pattern, as familiar names like MTN and ETI continue to dominate the scene. Over in Nigeria, the market reversed yesterday's positive return as the all-share index shed 9 basis points. The red close was largely driven by losses across board, as we saw all sectoral indices close negative, with the exception of the 9 basis points gain in the consumer goods space. So losses were recorded in the likes of Adova, FTN Cocoa, NGX Group, and WAPCO, just to mention a few. Also, activity level trended down, with volume and turnover declining as market breadth also stayed negative. So the market was still dominated by sellers, as we saw a total of 13 stocks close up versus 20 decliners. We do not expect a major deviation from today's session as investors continue to take profit on some stocks while buying up other fundamentally sound names. On the final note, MTN Group has released more information regarding its intention to sell down about 14% of its current shareholding in MTN Nigeria. So the offer is expected to open this month, after the appropriate price has been determined by way of book building, and it will be available to institutional and retail investors. And offer is expected to close December 2021. Consequently, this will mean that the free float of MTN shares would be increased. Thank you, and that'll be all from the equities desk.
Thank you very much, Simbiat. Up next is Omarge giving us a review of the Nigerian fixed income and currency markets. Good morning, Omarge.
Good morning, everybody. System liquidity declined significantly to open at about 137 billion positive yesterday from the 119 billion positive that was recorded on Tuesday. The decline in system liquidity, coupled with the increased funding pressure yesterday, caused interbank rate to tighten by an average of 825 basis points as OBB and overnight rate closed at 13% and 13.25% respectively. For today, we expect interbank rate to hover at these same levels in the absence of any significant change to system liquidity. The parallel market traded at 517 naira to $1 yesterday, while the annual window opened at 413.16 naira to $1. The highest rate that was recorded yesterday was 444 naira to $1, while the closing rate was 414.80 naira to $1. Brent and WTI lost 1% and 1.11% to open today at 81.19% and 81.19 and $79.94 per barrel respectively, following the agreement between Iran and world powers to resume nuclear talks this month, and this could lead to the removal of US sanctions on the Iranian oil, which will most likely lead to increase in global oil supplies. The TV's market traded on a very active note yesterday, with interest seen majorly on the mid to long dated maturities, especially on the 31st March 2022, 29th September 2022, and the 27th October 2022 maturities. Trades were majorly consummated on the mid to long dated maturities, particularly on the 31st March 2022, 25th August 2022, 27th October 2022, that's a newly issued one-year paper, and the CBN Special NTB, with average benchmark rate remaining unchanged at 5.19% levels. The OMO market also traded on a very active note yesterday, with interest in majorly on the 4th October 2022 maturity. Trades were majorly consummated on the 22nd February 2022 and the 19th April 2022 maturities, while average benchmark rate rose by about 5 basis points to close at 6.02%. The bonds market traded on a muted note yesterday, with mixed sentiment seen across the benchmark curve. We witnessed interest across the curve, especially on the 2028, 2035, and the 2050 maturities, while few trades were consummated on the 2028 maturity. Overall average benchmark rate remained unchanged at 11.99%. In other news, the DMO released a circular yesterday stating that it's set to issue sovereign sukuk bond this year. They are looking to issue between 200 billion to 250 billion to finance critical road projects across the country. At the meeting yesterday, the Fed announced that it's going to be leaving rates at the range of 0% to 0.25%. They, however, stated that they are going to significantly reduce the purchase of bonds. So market reacted to that, and we witnessed a lot of sell-off in the Eurobond market yesterday, as we saw a lot of people trying to sell off their sovereigns and corporate positions. The most actively traded sovereigns were the Nigeria 2025, 2027, 2032, 2033, 2038, 2049, and the 2051, while the most actively traded corporates yesterday were the EcoBank 2024 and the Fidelity Bank 2026. For today, we believe that the current weak sentiment in the bonds market will continue to persist as investors continue to share a peak attractive offers across the benchmark curve, while we expect the TB's market to trade in line with the level of system liquidity. That will be all for fixed income. Thank you.
Thank you for the updates, Omarike. Before we move over to our Q&A segment, we would like to announce that tomorrow, Friday, the 5th of November, we'll be having a special session with our economist, Ibukun Omoyeni, who will be speaking to us on extracting the e-naira. We look forward to seeing you, as it promises to be an enlightening session. We have now come to our Q&A segment, and if you have any questions for our speakers, you can send them in using the chat functions available on Zoom. If you are joining us from Facebook, you can use the comment section. However, if you prefer to speak, you can indicate using the raise hand function, and you'll be granted an opportunity to speak. Okay, so we have a question. It says, this week we have seen the fixed income market close flat for the most part. why has sentiment in the secondary market been tepid this week? I believe this question will be directed to Omorige. Over to you, Omorige.
Good morning. Thank you for the question. Okay, coming into this week, and when you look at last week, we have a lot of coupon inflows on the 2029, 2049, and that kind of like spurred buy-side interest in the market. But this week, we have not really seen any of those inflows. Liquidity has not been very strong, and the T-bills market has been hovering around 6.8% on the one-year paper, given that it closed at 6.99% at the last auction. So interest on that end has been very muted because of the low levels that are currently obtainable in the secondary market levels. While in the bonds market, we have just seen intermittent activity depending on the sentiment that's currently in the market. We have not really seen a lot. Like I already said, there's no buy-side interest in the market because of lack of liquidity on the back of no coupon inflows coming into the market to spur some buy-side reaction. So that's basically why we have not seen a lot of activity in the market. A lot of people are just staying on the sidelines. There's really no clarity regarding what's currently happening. At some days, we see market trade bullish. Other days, we see trade bearish. So the lack of uncertainty has also contributed to the muted activities that we have seen in the fixed income space.
Thank you so much, Omorige. We have another question in the Q&A. Okay, sorry. Last week and also going into this week, markets was filled with news about CBN's devaluation of the naira as dollars was sold at 445 to 450 corridor to FPIs. Has CBN tacitly devalued, or was this done just to clear the backlog of the USD demand? This question will be directed to our economist Ibukun Omoyeni.
Yeah, good morning. So on the question, of course, it was in the news that the CBN was selling to FPIs at 445 naira to the dollar, questioning the fact that there have been inflows into the external reserves. It's possible that the CBN could actually part away with some of those funds in order to meet the FX backlog. One other factor is the fact that compared to banks, the CBN is not, when you look at BDCs and banks, right? When the CBN was funding BDCs on a weekly basis, cutting off BDC from supply also has less pressure on reserves. So definitely that could have taken place, but we can't necessarily say it's a devaluation, because with the adoption of the NAFEX rate, unless we see a significant jump in the closing rate of the NAFEX rate, we can't call that a devaluation. What we have seen is that the CBN usually carries out activities at a high rate, and it eventually closes at a lower rate. So for anything we see now, we don't expect to see a constant depreciation in naira as the CBN tries to adopt a calling break framework. And that would help to move the naira towards its fair value. So that's something to talk.
Thank you, Ibukun. We see that we also have Dapo with raised hands. I think he has additional comments. So we'd like to call on Dapo.
Okay, thank you very much. Just some additional color. Whilst to a large extent it's not clear, it's not spoken, you might say it's not a devaluation, but as the question put it, it's a tacit devaluation, however you choose to look at it, because the INE window also responded to that move. And again, we are all clear that given that we've delayed devaluing for a period of time, it becomes more and more imminent that we'll continue to see a bit here and there till we finally get it right, basically. So it's a tacit devaluation, however we choose to look at it, just to put out there. And again, they have the war chest now, like Ibukun rightly mentioned, to a large extent. It's not where we should be, but again, there's Eurobonds inflows into the reserves, and also going into next year, the Minister of Finance also noted at some point that considerations are also there to go back and tap the market. We've also seen consistently strong oil prices until about a couple of days ago. All this continues to give some level of comfort to the central bank to say, okay, we can do this here and there. The offshore investors are also seeing that the result is building up. So even when you move rates up for them, there's a balance. The only thing we've not seen is the interest rates moving up to an extent where it starts to attract this investment again, because valuation starts to become cheap when these things go up and go close to reality. And that's the way you look at it, that probably they're starting to see that how do we meet also trying to get new inflows. Before you do that, the pending ones probably needs to go out. Moving rates up and selling to them is better for the country, maybe not so great for those that are locked in, but new inflows that want to come in will also consider that these things are moving up. Let us start positioning to come into the country. That's that for this. For the previous question as well, just for additional color, liquidity is not so strong in November, like Omorege mentioned. Also, when you look at the fact that there's no liquidity, there was an announcement about Sukuks coming up. There's no clarity as to whether the DMO has borrowed strongly and they will slow down into the end of the year. Another budget reset is coming up in December into January. Once it's passed, you start to look at this government, the inflows are not strong, revenue is not as great. They'll have to borrow to fund anything, even going into next year. Are these yields going to stay here or they are going to move up? Any investor will step back to wait and see, how that materializes. And knowing that November is not liquid, it's better to stay and watch a bit and see where yields pan out. And that's basically why this week has been pretty much quiet. We expect November to be a bit of that way, but we'll continue to see trickles of buy and sells intermittently, people exiting hold positions to go into new one for the auction, people exiting hold positions to try and see whether there will be a bargain in the sukuk that will be coming up. So those are the considerations generally across both questions. Thank you.
Thank you so much, Dapo. With no more questions, we have now come to the end of today's session. And on behalf of Vetiva Capital Management and our partners at Frontier Africa Reports, we would like to say a big thank you for joining us today, and we hope to see you in tomorrow's session. Have a great day and good morning.